Everyone has a path that leads them to where they call home. This podcast is about that journey from wilderness to home. Hey, everybody, and especially hey to my nerds out there. Today is for you. I'm going to be talking about the 2026 housing market forecast. Most of the data that I'll be using comes from the Salt Lake Board of Realtors. I will link this PDF if you want to read the full report. It's pretty interesting. One thing about me is I didn't know anything about economics until I got into real estate. So I really find a lot of joy in learning about this. Also, having worked through the COVID pandemic, really interesting things have happened. I also bought my first home right after the Great Recession. So I've lived through a lot. I've seen a lot of these things happen. I'm going to try to break it down for you in a really simple way. Whether you're making decisions to buy or sell, I hope I add to your wisdom. I cannot tell you the right time to buy or sell, but I can give you good facts to help you make an informed decision. So if you've been following headlines at all, you've probably heard everything from the market is about to crash to you've already missed your chance because interest rates aren't below 3% anymore. I'd like to dispel all that with one proverb that I did not write. The best time to plant a tree was yesterday. The next best time is today. So you have to live somewhere. You need housing. That's the bottom line. And my job is to help you make the best decision with what you have in the time that you need it. So I'm going to break it down into something simple. I'm not going to make strong predictions or cause panic. I'm just going to list 5 things that you actually need to know. So point number 1 from the housing forecast is modest growth in home sales expected. The number of homes selling has actually, it's the only metric that's gone down, essentially. In some markets, prices have gone down a little bit. Nothing to write home about. But the metric that has gone down is the actual number of sales that we're seeing. And in my opinion, that's because people who have a below 3% interest rate don't want to move. And I don't blame them at all. If you love where you live and it works for you, great, stay there, pay it off. But experts are projecting total home sales in Salt Lake County to rise modestly in 2026. We saw like a little strange boom in December, which was interesting. I think just the interest rates finally dropping or people finally accepting that there's not going to be a crash and that the time is now. That's a good thing. So the market isn't booming, but it isn't crashing either. And it's steady and slightly improving. This is some normalization that we're seeing after the crazy chaos that was the COVID pandemic. So point number 2 is prices are largely stable. They sometimes are flat year over year, but we are seeing small increases of approximately 1 to 2% overall. So what that means is prices won't skyrocket like they did during the pandemic. Again, a softer market like your mom. But widespread price drops are not forecasted either. No economist I know is predicting that there's going to be a market crash. The median home price for Salt Lake, it depends on where you're looking. If you want a specific amount, like if you want to know in a specific area, just let me know and I'll get that data to you. But it's around 550,000 right now. 3 takeaway is local experts describe the market as holding its own without big spikes or collapses. Interest rates remain above 6%, although in the last week, they've come down a little bit. Yay! So there's a gradual pace of activity. There are people out there buying and selling for whatever reason. Real estate is a river. My mentor, shout out to Leslie, taught me this. Real estate's a river. The river's always flowing. It might not be a roar, it might be a trickle, but it's always flowing. So expect a calm, balanced market without frenzy or a whole lot of buyer competition. Although I will say I have been working with a first-time home buyer since the beginning of the month. I showed them around 25 homes as well as 2 new construction communities. We've been very busy, and I would say quite a few of those homes, at least 5, so that's 20% of those homes had multiple offer situations, an offer in hand by the time we went to do the showing, or they had already gone under contract. So it depends on the price point you're at. If you're in that median range, 400 to 600,000-ish, that's the largest buyer pool there is. So there may be more competition there than the higher price points, but that was a very interesting experience for me. The people who know the market the best are actually the buyers, not the sellers. The sellers know the market the worst. Some of them around here, I've noticed, are really stuck in the time when we were having large gains in home equity, interest rates were really low, and they just can't seem to wrap their head around that their house is not worth what they think it is. Selling is also very emotional. So it's important to communicate the facts of the housing market. Point number 4 is there's a mix of headwinds and tailwinds. So there's a lot of challenges. There's economic uncertainty, slower net migration, meaning people moving into the state. Many homeowners are locked into low rate mortgages. And the positives are mortgage rates are easing a little bit. We're recovering from the pandemic. There's a young population out there. The average age for a first-time homebuyer is now 40. That does not have to be the case. We just need to plan for it. Some factors may slow the market, but others will help it stay stable. So number 5 is inventory. This is the single most important metric to the housing market, in my opinion. Balanced market is about 5 months of inventory. If we go below that, we see a seller's market because buyers are comparison shopping. If we go above that, we have a lot of inventory. We are seeing a buyer's market where there's more negotiating power. So right now, we are still technically in a seller's market. It's just a little softer. It's kind of like running in place. We're running in place after the boom. Buyers have a few more homes to choose from, but there still is an inventory shortage because of slowed new construction of affordable homes. So local markets are super important and they vary a whole lot. I have this really interesting graph here about how prices have increased the last year versus the last 5 years in my local area. I will share with you. The bottom line is there's more choices for buyers, a little bit more negotiating power depending on your price point and the property that you choose. We are seeing sellers pay closing costs for buyers sometimes and come down on the price sometimes. Nobody's predicting a major crash. There wasn't one. We don't think there'll be one. My magic 8-ball is broken, but I don't think there's going to be a crash. There's been a slight uptick in sales, and we should see more of that this year. Interest rates are cooling and becoming more manageable. Don't be obsessed with the rate. Just consider whether or not you can make your monthly payment. Most homeowners will sell within 5 to 7 years. So that bottom line doesn't matter as much as the monthly payment. Make sure it's affordable for you. I do have some strategies to bring that down. We are seeing some sellers pay for interest rate buydowns and refinancing, although there's no guarantee that the interest rate is going to be that much better to warrant a refinance later. The market is not extreme anymore. So that's the bottom line of what's going on in the housing market. I hope you enjoyed these statistics. Let me know what questions you have about it. But if you're waiting for prices to drop, my advice to you is let's meet and talk about what it would look like. I promise I'm not a high pressure salesperson, but if you wait 2 years to buy a home, in theory, based on these statistics, you're going to end up paying 4% more than someone who bought this year, which may be fine for you if that works with your life situation. You got to do what you got to do, but it's not ever a bad time if you're thinking about it to get more information and see what's out there and see what kind of creative lending practices we can come up with. Although I will say the lending practices that led to the Great Recession are no longer in use. Lenders are way more conservative. I work with a few great conservative lenders who are going to give you a really good sage advice. So reach out if you have questions. Let me know what you want to know. And thanks for listening. We'll see you next time on Wilderness to Home.